97% of traders will fail in 2022 because of this reason. They do not follow one strategy until success is proven. You're jumping from this strategy to the next strategy to the next strategy, hoping that it's all gonna work when you haven't even tested that strategy for 6 months straight. And that's the problem with a lot of traders, is they wanna see results right away. So let me show you a very quick and easy strategy to replicate that is proven to be profitable for me, and I've been trading for 7 years, so I think I know what I'm talking about. Before we get started, I need you guys to like this video. It shows me that you support the grind and you support me putting out content. And if you're new to my channel, make sure you subscribe. Also, my last and final Forex course is dropping June 30th at 12 p.m. PST. Make sure you guys take advantage of that. I'm gonna be dropping on my Instagram. You guys can follow me on my Instagram right here, or in the link in my description. Without further ado, let's get into the sauce, baby. I cannot tell you guys how frustrating it is to get started trading Forex with absolutely no guidance. So if you want a program that actually works, check out FX University. There's a link in the description where you guys can sign up. So I want to go over this strategy with you guys, and this works on literally any currency pair, any time frame. You just have to apply it. Now, I'm not going to give you guys the step-by-step process like I probably am, because I'm just spilling sauce all the time, and I know 97% of you won't even apply it, so I can't give away my secrets because, like I said, 97% of you are lazy and won't even do shit after watching this video. If you are part of the 3%, what you're going to do is you're going to go to your chart after you watch this video and apply what I'm teaching you. You're gonna go look for it. Like, if you guys are just going through YouTube and watching videos and not freaking applying what the people are teaching, it's not gonna make sense. Like, you guys need to go to your chart and look at it like, damn, like, I see that happening. That's what it is. That's what I see happening. Colt's so right. And that's when the breakthroughs are really gonna happen for you guys. So, the way that I trade is very easy. All I'm looking at is market structure and candle recognition, meaning that I'm looking for zones of support and resistance where the market is rejecting a specific zone, and I'm looking for reversal candles at those levels. Now, instead of support and resistance, I like to use psychological levels like 33,000, 32,750, 32,500, 32,250. We can see when the market hits specific levels like that, it moves away. When it hit this level right here, this 33,000 level, it hit it, closed below it, and then boom, really pulled away from it. So from the 33,000 level to 32,500, that's 5,000 pips right there. That's a 5,000 pip move that happened in 1, 2, 3, 4, 5, 6, 7, 8, in about 8 hours, which is pretty freaking crazy, knowing that US 30 is an indice, and that's an absolute crazy move. So what you guys really want to be doing when you're trading is you want to be trading when there is a session. The Asia session, the New York session, the London session. This is when the money is actually going to be fluctuating through the market, and those are the times where you're going to be able to make money. So when I'm trading, I like to use a sessions indicator. So if you don't have this indicator, definitely get it. It's right here, this indicator on TradingView. So once you set it up, there's going to be a settings tab, and you're going to be able to choose the session that you want. My TradingView is tripping, I don't know why, but if you go to settings, it'll say London, Asia, and New York. Click whatever session works for you in the time zone that you trade in. Now, what I'm looking for is, like, what you need to do first is go on a specific time frame, usually higher to lower time frames, and see when these big moves are happening within those sessions. So right here, look at, we have this reversal candle at 4 a.m. to 5 a.m., my time in California PST, and then a nice drop. And then it goes up for the open in the market from 6 to 7 a.m. and then drops more. So when we see this bullish candle right here, followed by a bearish candle, what we're going to do is we're going to grab our eclipse and we're just going to highlight these two candles right here. And then what we're going to do is go to the minute 15 time frame and see if we could see that reversal there. Okay, so there's that push up right around the market open about 15 minutes after. Actually, This video is sponsored by my program FX University. Go to the link in the description to sign up, or there should be a link on this page. Once you go to join now, you're going to go to get started, and once you do, we're going to give you a code for 15% off. Go right here where it says to add promo code, type in FX1 and click apply. Yeah, 15 minutes after, because this is market open from 6:30 to 6:45. This is 6:45 to 7 a.m. So boom, pushes up and then drops. But what I'm looking for is how am I going to see these big drops occur before they actually happen? So one thing that I'm looking for is it to reject market structure, support or resistance, or a psychological level. So when I see that it's getting close to the psychological level right here and it closed below it, I was like, all right, usually when it breaks the psychological level or support or resistance, it'll break it and then retest. So whenever you see that the market is rejecting a psychological level, if you can get in right when it's hitting that psychological level or rejecting it, perfect. But if you can't, do not chase a trade. Wait for it to come in a retest. So this is the retest right here. But how are you going to know after this bullish candle that it's going to drop? I mean, you could look to the left right here and see this support that later turned into resistance right here. But that's hard to see on the minute 15 time frame. So let's go to the minute 5. And if you can't find like the reversal candle on the minute 15, go to a lower time frame. Okay, so this is overall where this reversal happened. This was around like the market open, it pushed up to get that false breakout, and then it actually shot down. We had a big zone of consolidation for a really long time, but then it finally pushed down. But this is overall a reversal pattern right here. We have a bullish candle right here, followed by a bearish candle. And if we zoom in, we could see that this is a bearish engulfing because this candle, the body of it engulfed the body of this bullish candle. So that's a bearish engulfing. So it's really easy. All I'm doing is going from higher time frames and overall getting my directional bias. First, I'm usually looking at the trend. Are we in an uptrend or downtrend? And then I'm going to just go with the trend. But I'm not just going to like sell right when it's already dropping. I want to get a very precise entry. And that's why the saying comes, buy low, sell high. So we want to sell high so we get in at a very optimal trade entry. And that's going to ensure that we have very tight risk and our stop loss is not massive. So the next thing that you need to do when you're actually taking your trade is you want to wait for the setup to occur. So what I suggest that you guys do is kind of go and back test, look back in time when these moves are actually happening. And then you're like, all right, well, a lot of the moves are happening from 6 a.m. to 8 a.m. between that time frame. So that is the time that I am going to trade. So let's go back to the hour time frame. I don't know why my date was set to that time right there. Okay. So here was a day that we just went over. Okay. We can see these big drops are happening during the New York session. These big pushes are happening during the New York session. So those are the times that we're going to be looking at. So like I said, guys, just go through, look at the reversal candles. And if you can't see a reversal candle before a big push up or push down, you need to go to a lower time frame. So overall, when I'm trading, this is what I do. There's like key times that I trade. So like right here, actually let's do this. We can see right here, this was a perfect setup on Wednesday. Yep, Wednesday the 8th. So this is the 8th right here. We had a spinning top followed by another spinning top and then a big push up. So one thing that you need to be looking at when you're looking at these reversal candles is a very key way of telling it's going to be a reversal candle and there's going to be a big move after is when they have a lot of wicks to the downside. So let me really explain the psychology behind the wicks, what this means. Okay. So we can see that this candle has a big wick to the downside. This is the market open, by the way, for the U.S. equities market at 6:30. So right here, this candle has a big wick to the downside. You need to understand when we have these long wicks like this, this is telling us that there are orders trapped in those wicks because this wick right here was filled at one point. It was down all the way right here. And a lot of you retail traders, no offense to beginner traders, when they see moves like that happening very quickly, they're just freaking out. They're like, oh my gosh, this is what everyone's talking about, the big move. We gotta sell right freaking now. So they're all selling in this wick. So it's like sell, 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 sell. And then the market makers are like, all right, there's like $100 million in equity trapped down there, liquidity trapped down there. What we're going to do is pull this back. So all these people that are in sells down here, they're negative. They're freaking out. And then what they do again is they drop it one more time on this candle. We see the wick right there drops one more time, and everyone's like, all right, yeah, it's going down, it's going down. I'm like, sell more, sell more. They're risking their whole account because they want to get rich overnight. And the market maker's like, all right, perfect. We just got another 300 million in liquidity trapped down there. Let's pull it up. And they're like, all right, let's do it one more time just in case they didn't fall for it and they don't think it's going to be a short. Like, all right, let's sell. But all the real professional traders, they're looking at this and they're like, all right, it's open in the market. There's going to be a false breakout, meaning they're going to push it in the actual direction that they don't want to go in, and then they're going to go in the direction that they want. So all the smart traders are buy. They're buying, and they're all in profit right here. Like, all right, watch this. In the next 5 to 15 minutes, it's going to push up. Like, all right, it's about to happen right now. And then boom, once they see this long wick to the downside and it's pulling away, they're like, all right, perfect. They trapped all the sellers in those positions, and now they're going to grab all that liquidity and move away to take all that money, because all the traders have their stop loss probably right here or above this candle. So when they push it up, they're backing like $500 million right away because the market just pushes up and it grabs their stop loss and like, boom, we just came up fat. We snatched all their money. So really the important thing to do, this is how you guys are going to get very good at trading, is figuring out the time that you're going to be trading and sticking to that time. Show up every single day at that time, and you're going to be able to see this stuff happening right in front of you, and you're just going to get so good. You're like, wait, I saw that 2 days ago. I saw the same thing happen. That's what they're doing. They're pushing it down to make everyone go short. So now's a good time to buy. I'll put my stop loss 500 pips below my entry, and then I'm going to have my take profit for 2,000 pips. And then boom, if you got like an entry all the way down here and you wrote it up 1,800 pips in a matter of 5, 10, 15 minutes. Like, that's insane. That's why I also trade indices, because they are way more volatile than Forex pairs, and this is really where the money's at. Guys, I hope you got value from this video. Take this information I'm telling you and now go apply it. Go to your charts and look at what I just taught you. And if you're really smart, what you'll do is go through this video again, but pause it at certain key times that I'm telling you, and then go through and be like, wait, I see what you're talking about. I'm on the US 30 chart too, Colt. I see exactly what you're talking about. That's crazy. And that's when your breakthrough is going to happen. You're just like, wow. It's really powerful when you actually can see what somebody is teaching, but it's not going to work unless you work. So you guys have to put in the work. And I know a lot of people, they're lazy. A lot of you watching this video right now, you're freaking straight out lazy. Why? Because the information I'm giving you is free. So there's really no commitment, versus if you were to buy my program for $300, then you'd be like, all right, I committed. I put $300 into it. Now I got to apply the information. But really, like, the stuff that I'm giving you is what I use on an everyday basis to trade. And like I said a second ago, I can give away most all my secrets because 97% of you, probably 99.99% of you, will not freaking apply it. Meaning out of 100 people that watch my videos, maybe one of you will go and apply what I'm teaching. And that's something to think about. That's food for thought. I'll see you guys in the next video. Peace.